Hello. We have spent the last few weeks talking about different income types. We've talked about W-2 income, self-employed income, and there are a lot of other kinds of income that fall in other categories. So today we're just going to do a little bite-sized piece of those, which is talking about how to buy a house when you are retired. What income can we use? You're not working right now. Let's dive in. The first is Social Security income. If you have your award letter handy, send that over. That is the simplest, fastest way for us to calculate your Social Security income. If you have been receiving your Social Security income for several years and the award letter isn't handy, you can send us your most recent tax returns. And on the 1040s, it will have the income listed, and we can go off of that. If a large portion of your Social Security income is not taxed, then it's best to send us those tax returns because oftentimes we can give you more income by going through that calculation. The second type of retirement income that I'm going to talk about is pension. So when you receive a pension or an annuity, we're going to need a copy of the benefit letter that you receive so that we can give you credit for that income. If you don't have the benefit letter handy, you can send us recent pay stubs. Since this is an income coming from your previous employer, you'll be getting pay stubs, so send those over. Or if you've been receiving this for several years, we can also look at your tax returns and base it off of what you've received over the last 2 years. Another type of income when you're retired is taking draws and distributions from your retirement accounts, from your IRAs, from your 401ks. So in order to count these as qualifying income, first off, they need to be distributions versus draws. And that simply means that you take the same amount every month. And to prove that, we'll get a copy of your statement, of your bank account statement, your 401k statement. On there, it will show the distributions that you receive. Now, it's handy that if you don't qualify for the loan that you are wanting to take out, because you're being very careful with your money and you're taking low distributions, you could potentially increase that distribution so that we can show more income and then keep that distribution at that higher amount if you choose to, or reduce it later if you decide that you don't need it to be that high long term. Now, if you don't take distributions, then we have one other trick up our sleeve, which is where we look at asset depletion. And this is where we look at how much money you have in the bank after closing. So obviously we can't count what you're going to use for down payment. So after closing, how much money do you have in the bank? And then if you were to draw on that monthly, how long would it last? And there are formulas that we use to run that calculation. That's another way to count your retirement accounts as income. For all of these income types that I just outlined, you must be of retirement age, which is 59 and a half or older. If you are below that age and simply have a bunch of assets that you want to use as income, it doesn't work like that. There are other specialty programs that perhaps would work for you, but what I'm talking about here is for people of retirement age. Sometimes I am asked, can I still get a mortgage if I am close to 80 years old or in that age range? The answer is yes. We cannot discriminate, nor would we discriminate against anyone for any reason, age being a protected class. And so even if you don't feel that you might have 30 years in your horizon, you can still get a 30-year mortgage. If at any point you would like to explore a reverse mortgage to learn about how that might fit your current situation, we're happy to talk about that as well. Hope this is helpful. I'll be back next week with another bite-sized bit of these odd types of income. Reach out with any questions. Ciao.